In this video, we're going to be breaking down the biggest funding myths that are holding you back from securing business funding. Most people have no idea what lenders actually look for, and because of that, they disqualify themselves without even knowing it. Today, we're going to clear all that up. We're going to expose the myths, explain the truth, and show you how real people secure $150,000 or more in 0% interest business funding, even with no revenue. Now, let's get into it. So, myth number one, a 700 plus credit score is all you need. And while that's extremely important, it's only the starting point. Banks care far more about age of credit history, comparable limits, and overall profile strength. If you're asking for $20, $50, or even $100,000 limits, they want to see at least one card with a minimum of a $5,000 limit on its own. Score alone does not get you funded. The structure of your credit profile does. Myth number two, you can add trade lines to a brand new profile and get approved for $150,000. Now, this is one of the biggest scams the trade line vendors try to push. They happily sell you a $300 to $700 trade line, but they don't care if you get approved. They benefit whether you succeed or not. So trade lines only help with two things: increasing your average age and reducing utilization. They do not magically qualify a thin profile for high limit funding. They're a tool, not a magic button. Okay. Myth number three, you need net 30 accounts to build business credit scores. Completely false. In 3 years of funding clients, we have never once needed a net 30 account, a paydex score, or a business credit score. Business credit does not drive approvals. Your personal credit profile does. If you want to know the perfect structure lenders are actually looking for, check the perfect funding profile video on this page. Then we got myth number four. Having a higher credit score gets you more funding automatically. That is false. I've seen someone with a 680 credit score get more funding than someone with an 800 score because the 800 score had a thin profile, no history, and no comparable limits. Banks fund based on strength, not just score. You need age, mix, and limit history matter more than just an extra 20 points on your score. And then you got myth number five. You can add a credit builder account like Ava or Kickoff to a thin profile and secure funding. These accounts are fine for building credit, but they do not help you get funded. They do not show the banks you can manage high limits. They are simply starter accounts and nothing more. They help you build basic credit, and then from there you want to move into primary cards such as Discover, Chase, Citibank, or Bank of America. But that $35 a month credit builder will never qualify you for real funding. And then you got myth number six. You need to generate revenue and have tax returns to get approved for a high limit funding. This is one of the biggest blockers mentally. We've funded clients for years without revenue, tax returns, bank statements, any documents at all. If you know the right data points, the right banks, and the right profile structure, you can get up to $150,000 in 0% interest, business credit cards, document free. And then we have myth number seven. You can apply for new personal credit cards to meet the credit card limit qualifications and go for funding the right way. You cannot do this. If you get approved for a brand new $5,000 card and apply for funding immediately, one, it looks desperate. Two, banks will see the new accounts and then that will cause them to deny you. You must wait at least 6 months after opening a new personal credit card before applying for any type of business funding. And then we got myth number eight. Closing old accounts actually helps to improve your score. This is absolutely false. Closing old accounts only lowers your average rate, which is bad. It lowers your credit score, which is bad, and lowers your funding potential, which is bad. And then it lowers your average age of the credit account, which again is bad. So old accounts actually increase credibility. So you never want to close them unless they have an annual fee that you just can't avoid by downgrading. And then finally, myth number nine. This is too good to be true. Why would banks lend me money with no revenue? Well, here's the truth. Banks make money by lending money. When they give you 0% interest, you grow your business, you deposit revenue into your business checking account, they lend that money out at higher interest rates, and that's a full circle model. I have personally secured over $200,000 in 0% interest funding with no tax returns, no bank statements, and no revenue. All it takes is the right credit profile, the right data points, and the right banking relationships. Now, you want to know the truth about all these myths? Is every single one of them is pushed by people who don't know the funding game, people who sell unnecessary products, and people who don't understand bank underwriting. We have proven over and over again that none of these myths matter when your credit profile and data points are structured correctly. Now, if you want real funding the right way, You can sign up with us. We'll walk you through the entire process step by step. You can click the link below, book a call. This here we offer a done with you service, which is where we show you exactly what to fix, exactly how to structure your profile, exactly what data points to use, exactly which banks to apply with, which will get you the max funding. We help secure $100,000 to $150,000 or more in 0% business funding the right way, without denials, without low limits, and without guesswork. Now, if you made it this far in the video, it shows that you're very serious about your business. I do want to help you, so if you want, go ahead and book a call below, and we'll talk soon.